Most people will stay broke until 2027, and they won't even realize why. But for those of us paying attention, the path to serious wealth is hiding in plain sight. In this video, I'll break down the 8 stock sectors I believe are shaping the next wave of millionaires. I'm not here to hype penny stocks or sell you a dream. I'm here to tell you what I see coming, based on real patterns, powerful trends, and the exact moves wealthy investors are already making. Whether you're starting with $500 or scaling a 6- or 7-figure portfolio like some of my clients, these are the plays you need to have on your radar before the window closes. Let's dive in. Tech. Tech isn't just a sector, it's the bloodstream of modern wealth. Every single disruptive fortune, Gates with software, Bezos with logistics, Musk with ecosystems, was built through tech. The next wave is no different. Most people look at companies like Apple, Microsoft, and Google and think, too late. But what they don't realize is the real window is opening, not closing. Take Tesla. Most people still treat it like a car company, and recently, they've written it off as a struggling one. But that's exactly what makes this moment interesting. Tesla isn't a car company. It's one of the greatest tech companies of our time, and one of the most undervalued when you strip away the media noise. In the coming years, Tesla will do more than lead EV innovation. They're on track to disrupt the rideshare industry entirely, offering autonomous rides for a fraction of the cost of Uber or Lyft. Think about that. No drivers, no labor cost, just on-demand transportation powered by AI. 90% of the future value in EV companies is expected to come from autonomous ride-sharing, not car sales. And Tesla is the only player with real-world data and scale. That alone could 5x their valuation, but it doesn't stop there. Tesla is also working on Optimus, their humanoid robot. The goal? Have one in every home across America, and eventually across the developed world. A robot that handles errands, tasks, daily automation. If they execute, we're looking at a multi-trillion-dollar category being born in real time. So when I say tech will create the next generation of millionaires by 2027, it's not a guess. It's math, timing, and execution. Miss this wave, and you might be stuck playing catch-up for the next decade. AI. Every few decades, a breakthrough comes along that changes the rules for everyone. Artificial intelligence isn't just a breakthrough, it's a paradigm shift. And if you position yourself correctly, it might be the single biggest wealth transfer of your lifetime. Here's the truth. During the gold rush, thousands of people chased fortune by panning for gold. But the people who made consistent generational wealth, they weren't digging, they were selling the shovels. That same blueprint is playing out today with AI. While the headlines are filled with companies burning through billions trying to create the next genius model, the smartest investors are betting on the tools, the infrastructure that all these companies, OpenAI, Perplexity, even Elon's X, require to function. And at the center of it all is NVIDIA. Even DeepSeek's model, which shocked the market upon release, runs on NVIDIA's hardware. Countries like the US, UAE, and China are now investing billions into data centers and GPU stacks, because without NVIDIA, none of this exists. So while others gamble on the next hot AI startup, smart money is flowing into the picks and shovels layer: semiconductors, cloud infrastructure, and back-end scalability. That's where the real wealth is built. If you understand that, you're already ahead of 98% of the market. AI will change the world, but only a few will profit from the change. The rest will be distracted by hype, while the winners are already stacking positions. We've already covered Tesla, and how they're quietly building a trillion-dollar tech platform under the hood of a car company. But now let's talk about the next one. See, in every revolutionary industry, there's a turning point. The moment a company releases the product that unlocks mass market adoption. For Tesla, it was the Model 3. That car took them from niche innovator to global powerhouse. The second that vehicle became accessible to the average buyer, the stock launched and never looked back. Right now, Rivian is standing at that same edge. They've spent years building credibility with their premium trucks and SUVs, but soon they're releasing their cheapest, most consumer-focused EV yet. And when that hits, everything changes. Their stock has been trading under $20, ignored by the masses. But in investing, as in war. The silence before the explosion is often the most profitable moment. You don't wait for applause to place your bet. You position yourself early, while everyone else is asleep. Most men today lack this kind of foresight. They need the world to tell them what's hot before they act, but by then, it's already too late. Markets reward clarity, confidence, the ability to see what's coming, not react to what already happened. If Rivian executes the way Tesla did with the Model 3, the crowd will wake up, but the profits will belong to the ones who already had their position. This is how wealth works. The man who waits for permission is never first in line. Pharma, with Trump rising in the polls and RFK floating around the administration, Big Pharma is once again in the political crosshairs. Their message is clear: America needs less pharma, more wellness. And if you're the average retail investor, you'd probably take that as a signal to avoid the entire sector. But that's exactly the kind of thinking that keeps most people broke. They see, I don't invest based on emotion. I invest based on inevitability. And the truth is, even in a climate that's hostile to Big Pharma, the biggest consumer shift in modern health is still happening right under the surface. I'm talking about Semaglutide, the injectable weight loss solution behind the rise of Ozempic and Wegovy. This isn't a fad. It's not a detox tea. This is science-backed, government-approved metabolic rewiring, and it's exploding. Demand has been so extreme that even mass-market middlemen like Hims and Hers, who do a phenomenal job with gender-specific branding, have experienced widespread supply constraints. But here's the real play. Don't chase the storefront, own the factory. I'd rather invest in the company manufacturing the solution, not the one selling it through ads. That's why Novo Nordisk, the maker of Ozempic, is a stock I'm watching closely. They're not just winning the weight loss war, they're changing how society views obesity, energy, and aging itself. So while Trump and RFK might slow some parts of Big Pharma, this corner of the sector is booming, regardless of who's in office. And if you understand where demand is actually flowing, not where it's being politicized, you can make asymmetric gains even in a sector everyone else fears. As Andrew Tate would say, you don't get rich by playing the game everyone else is playing. You win by seeing what they can't see. Semaglutide isn't just a drug. It's a signal of where the next $100 billion in health spending is going. And I'm not ignoring that just because the headlines say I should. Consumer cyclicals, the power of predictable vice. Everyone's looking for the next flashy AI play or green energy moonshot. But sometimes the smartest move is the quietest. That's why I'm watching Philip Morris. While most investors are distracted by hype, PM has been stacking real profits with one of the oldest formulas in the book: addictive behavior, elite execution. But this isn't just about cigarettes anymore. Philip Morris is dominating the new wave of nicotine delivery, and at the center of it all is Zyn. What happened last year was unlike anything I've seen in consumer behavior. Across the US, stores were wiped clean of Zyn. Weeks went by with no restocks, no ETA, and no clear solution. It wasn't a marketing stunt. It was organic, social media-fueled demand. Users coined it the Zyndemic. Reddit threads, TikTok videos, viral scarcity. Everyone wanted it, no one could get it. Most companies would have cracked under that pressure. PM didn't. They responded by opening 2 new US manufacturing facilities, rapidly scaling supply without sacrificing quality. Since then, they've beat earnings quarter after quarter, and yet, the stock is still flying under most people's radar. Here's what you need to understand. PM isn't just selling tobacco. They're selling a vice product with religious customer loyalty, shielded from tariffs, supported by underground social virality, and now operationally built for global scale. You don't need to sell hype when your product moves itself. As Andrew Tate would put it, emotions are for spectators, control is for winners. Philip Morris didn't panic, they adapted, and they're quietly becoming one of the strongest cash flow machines in the consumer market today. I don't need it to be sexy, I need it to be profitable. And PM is doing exactly that. While most people are still trying to spell Zyndemic. Banks. Everyone's obsessed with chasing the next moonshot. AI, biotech, crypto. But the real power play? Banks. Because while the crowd tries to beat the system, banks own the system. Whether it's a booming bull run or a market crash, money still flows through the banks first. They lend it, they hold it, they move it. Even in 2025, that hasn't changed. But here's what has changed: currency itself. First, we saw crypto rise as a rebellion, defiance against the centralized control of banks. But now, under the most pro-crypto president the US has ever had, banks are adopting blockchain faster than ever before. And on the surface, it looks like a win. Decentralized tech, institutional adoption, mainstream usage. All great things, right? In many ways, yes. But I see what most people don't. The shift from physical currency to digital currency is more than just convenience. It's a structural reset of value transfer, and not in your favor. When you handed someone a $50 bill and that note changed hands 100 times, it was still worth $50. But now, when that same value is transferred digitally through payment apps, transaction rails, or digital wallets, even a 1% fee compounds over every hand it touches. After 100 transfers, that $50 isn't $50 anymore. They sold it as convenience, but what they really created was a toll booth on human exchange. And who owns the toll booths? The banks. That's why I invest in them. Not because they're flashy, because they're inevitable. JP Morgan, Bank of America, HSBC, these institutions aren't just adapting, they're absorbing the very tech that was supposed to disrupt them. They're integrating blockchain, partnering with fintech, offering crypto custody. They're not scared. They're evolving into the future faster than the average person can keep up. As Andrew Tate would say, if you don't control the money, you're a slave to the system. If you own the money's movement, you own the world. Banks are how you own the movement. Boring? Maybe. Profitable? Always. Retail, everyone says retail is dead. And in many ways, they're right. The old model, massive malls, bloated shelf space, and slow-moving brands is collapsing under its own weight. But what most people miss is that a few players aren't just surviving, they're thriving. Take Amazon. Most people think of them as the everything store. But what they don't realize is that a massive chunk of their profits now comes from AWS, Amazon Web Services. While you're ordering phone cases, Amazon is running cloud infrastructure for half the internet. AWS is the quiet engine behind e-commerce, fintech, streaming, AI, you name it. And as digital infrastructure demand grows, so does Amazon's dominance. But the beauty of retail is that it also gives you defensive plays, assets that thrive when the economy tightens. That's where Dollar General comes in. As tariffs, inflation, and fiat currency devaluation start squeezing families, people don't stop spending, they just spend differently. They trade down. They look for cheaper options. And Dollar General becomes the safety net. It's not glamorous, but it's predictable. As Andrew Tate would put it, while everyone else is panicking about prices, the prepared man is getting paid off their fear. Dollar General isn't about brand, it's about volume. It's about being in the right place with the right price when people have no room to mess up financially. So no, retail isn't dead, but retail without agility is. If you want to play this space, look at the companies. With speed and data, like Amazon, or with scale and recession-proof psychology, like Dollar General. Don't invest based on what retail used to be. Invest based on how people actually spend money when the pressure is on. Energy. If there's one sector people constantly underestimate, it's energy. Not just because they're distracted, but because they've forgotten the most basic truth of civilization. Nothing runs without power. Every click, every app, every AI model, every crypto transaction, every cloud server, all of it runs on electricity. And right now, the demand for that electricity is breaking records. AI data centers are exploding. Crypto mining is back in full force. Even the digital economy, lightweight as it seems, requires heavy power behind the scenes. You think NVIDIA's growth is impressive? Wait until you realize how much energy infrastructure is required just to keep up with their demand. And this creates two clear lanes of opportunity. One, traditional giants like ExxonMobil, Chevron, and Shell, still pumping cash flow and gaining strength every time geopolitics shake the table. Two, green innovators like NextEra, Brookfield Renewable, and Enphase, scaling solar, wind, battery storage, and grid tech with billions in global investment. Energy isn't red or blue, it's green as in profit. As Andrew Tate would say, control the source, control the system, control the world. I don't chase energy headlines, I look at power demand. And right now, between AI, crypto, and population growth, we are entering a super cycle of energy consumption. If you want to build real wealth by 2027, ignore this sector at your own risk. Energy may not trend on social media, but it powers the platforms that do. Outro. These were the 8 sectors I believe could define who gets rich by 2027 and who stays stuck watching from the sidelines. But knowing isn't enough. Execution separates winners from spectators. So I'll leave you with this: which of these sectors are you betting on? Drop it in the comments. Subscribe now, because next I'm breaking down the 10 most expensive mistakes I see unsuccessful entrepreneurs make. I'm Ankush Tasildar. Stay sharp, stay early, stay dangerous.